All right, guys, good morning. Good morning. Welcome aboard to the Morning Note. My name is Carlos Garcia, founder and CEO of GAR Capital. Thanks for taking the time out of your day to join me this morning and every morning. We usually do it at 9 a.m. Eastern Standard Time, but we're doing a little early today, an hour earlier, 8 a.m., because I won't be able to make the Morning Note at 9 a.m. I do have an appointment this morning. So I want to knock this out for you guys, get you guys prepped for the day, and we'll get you all set up. So again, you can watch this at 9 a.m. if you like. Hopefully nothing will change too much, but let's go ahead and get started. Dow futures up 72 points this morning. NASDAQ up about 49. S&P 500 up about 2.29%, and the Russell up 0.31% at 1961. Dollar index is slightly down, 102.47. The VIX is down 2.5% at 15.59. Just yesterday we hit at 18. Crude oil up nearly 1% at 83.68. We'll go ahead and chart that here in a second. Gasoline futures up 1%, $2.87. Gold futures are down 19.56. 22.77 for silver futures. Copper is up 0.85%, $3.79. Euro dollar is up 18 pips, 109.73. Dollar yen, 143.39. That is flat. 127.35 for the pound dollar. That's down 13 pips. Bitcoin is above 30,000, down about 0.23% on the future side. 1870 for Ethereum. Again, we know our levels, what we're looking for. 35,000 on Bitcoin is what we want. 2,000 on Ethereum is what we're looking for. All right, let's go again to the S&P 500 futures. So let's go and take a look at it. Again, went ahead and put a 4-hour chart to give us a little more background or a little more of a view. And again, the 4,500 level, again, that was the resistance that we had back in June and July until we broke out of it. So right now, we did wick below to 44.81 or so, and then we bounced rather quickly on that support. On the 4-hour chart, we're still below the 50, we're still below the 100. If we bring up the daily chart, we are still below the 20-day moving average. So really until 45.60, you really can't go long yet until you break above that 20-day moving average. Really the pressure is still to the downside. Still got that 50-day moving average still looming, 44.57. I thought we were on the path to getting there, and then that would be the place where we bounced, but we bounced right at 44.80 or 44.81. So again, we did slice that support of around 44.99 to 4,500 on the S&P. And the real reason is really just tech, mega cap tech taking a pullback after their earnings. Again, pretty much front ran everything at that point. Still below the 20. You're right at the 50. That's where we bounced, 15,222. That's probably why we bounced on the S&P. As we know, the NASDAQ 100 futures, a lot of stocks that are weighed in that S&P 500 index, and bouncing off the 50-day seems about technically so. The question is, do we retest it or do we bounce above to 15,639? That's really the level that we're looking for, the 20-day. You can kind of scalp in between, but for the most part, that's where we want to go and break for continuance to the upside. If we bring up a 4-hour chart on NASDAQ, you can see that we haven't been above that 20 moving average on the 4-hour really since when? The 7th yesterday, but it's been kind of breaking down below really since the beginning of August. So that's kind of been our resistance point so far this month. So as long as we stay below there, I still think 15.2 is possibly in play, 15,189. That's that dotted line that I drew, and you can see why I drew that dotted line. Right here, this is where we kind of chopped around really since June. So I drew that back in June. And again, if we break below that, then we're back to like June levels, early July levels as well. So again, really above 15,000 is really what your support that you're looking for. But the 50 looms large. And on the 4-hour chart, we still have some weakness. Until we start breaking above, this is still just chop and slowly melting down. But again, this is expected in August. We know that light volumes, we know there's light liquidity, we know everyone's on vacation, kids are going back to school. It's very difficult to kind of pitch to buy stocks at this moment after we had such a rise. So again, profit taking is absolutely normal in a bull market. You get some pullbacks. Again, August expected to be choppy the first 2 weeks. We have CPI tomorrow. We'll go ahead and talk about that when we have our morning note at regular time. But until then, it seems that we're just kind of chopping away, kind of killing some premiums the whole way. Let's go and take a look at crude oil together. We're going to go and bring up crude oil on the daily chart. And crude oil again, $85. Very, very key level. That's the level I'm looking for. Until then, you're still within just choppiness. Yes, you can trade it, and we have traded it. Really, I think since above 75, we've been hitting longs on crude oil. Choppiness here and there, getting stopped out at break even, but for the most part, that 85 level, that was that October 2021 high. Then we fell, and then we broke out of it in January, and then we fell back down in September, bounced above it again in October and November. But once November 2022 hit, we've been just steadily chugging along down. Uh, some good news for the oil bulls is that you're above the 20, you're above the 200, you're above every major moving average. The question is, do we get above 85? Or when we get above 85, are we going to do another SPR release to bring crude down? That's really it. So obviously we have geopolitical issues as well. You know, if you get a peace deal in Ukraine and Russia, this is going to tank rather quickly. If you get more fighting, more production cuts from the Saudis, or the dollar gets weakened, we're going to start seeing a little more upside, possible upside target around 93.82. That's your double top from October and November. But again, that's what we're looking for if we break 85. We're still at 83.64. So let's put that alert at 85 and see if we get that break. I did fill some trades yesterday. Take a look at Tesla. I went ahead and re-entered Tesla, and you could see we did pop a little bit. We're up slightly, 251.10 from 249.70. We do have a gap to fill here at 249.07. I expect that gap to fill and still continue to come down. If we just want to draw some trend lines just for fun, you could see that it's just been an extension down. You can pretty much follow that 200-day, 200 1-hour MA, and you can follow the 50. The 50 as well, that's been kind of that resistance. We've broken above it slightly. Maybe the 100 would probably be our best way to look at it. We've been below the 100-day, the 100 moving average on the 1 hour since about 3 Thursdays ago. It's about 3 weeks now. So again, you still have that downward trend still on Tesla. If we bring up the 4 hour, we can see that we still have downward pressure. We have a base of support so far right around 247. We're still in the bottom end of that range. 240 is going to come on Tesla if we get some weakness, especially with CPI or any kind of bad headlines. So that's why I'm holding it. That's actually my target, 240. We hit it on Monday. And again, it's the exact same setup. We did the same thing with Goldman Sachs a couple of weeks ago, where the same setup hit again, and we hit that thing 3 times. So I'm just going to follow the technicals right now because there's really not much to talk about in terms of Tesla fundamentally, since their earnings have already been coming out. Microsoft, another one that has a very similar pattern. Just downward trend on Microsoft. And again, it's not about that the company's bad. It could be just profit taking and some rotation. And you could just see a downward trend. Again, same that base support of 321.77. You have a daily gap to fill at 316. Once you break 321.77, it's pretty much over for Microsoft. You're going to get to 316, fill that gap, and that should be your bounce level. Not a horrible place to maybe add a position on Microsoft if you wanted to for some upside at 315.93. If you're looking for a little more of a discount, possibly 281.72. I expect that possibly in March if we get that seasonality pushed down. But as of right now, I think Microsoft and Tesla are still downward trending, and I think we get those puts. I know puts in a bull market is not easy. Let's take a look at Apple. I filled this with Masterclass, and we traded this week. 179.86 is your downward gap to fill. Here on Apple, we should be able to get that once we break that. Again, very, very similar stuff to Tesla and Microsoft, which have all been winners, as we know. But again, once we break 177.45, we got a gap to fill at 175.65. That's what we're looking for. Fill this gap first, push down a little more if we get some weakness. I can't believe I'm saying this, but we're looking for more weakness and choppiness in the market. I like being a bull. I like when stocks go up, not when they go down. But if the markets goes down, we have to make profit somehow. We got to pay the rent somehow, right? Got to pay the bill somehow. Can't just stay long when the market is showing us otherwise. You got to make sure and look at everything well-rounded. So NASDAQ is pulling back slightly here. Again, slightly up. It's not like we're soaring or anything. Yesterday we did bounce off the lowest levels. The S&P 500 is still up for the week. Let's answer some questions. Good morning. MPW from Young J. Let's see here. MPW. Good morning, Tesla, please. Yes, we just answered that, Clifton, so you're all set. Medical Properties Trust, I don't know much about them, but they are down this morning, or they were down yesterday, and now they're at 873. Downward trend. you're pretty much below the 200, the 20, the 50, and now the 100-day on the daily. So more downside to come, at least on a technical basis on this name. I don't know if they have a lot of put volume, but it's not very pretty on this stock. So I would not try to catch this falling knife as of right now anyways. I don't know much about them other than the ticker and the chart. So Tesla we went over this morning. Yep, that's pretty much all set. Let's go and take a look at Shopify. JD's asking me about Shopify. All right, so on the daily, we're still holding above support of 54.50. We're trading at 56.45. We still have that gap fill at 84.31. Same deal with the August choppiness. Only downside issue you have with Shopify is this gap to fill from June, I believe, 48.02. And again, it still gets you within this, between this range here around 54 and 44. So again, kind of just getting the same deal. You get one leg up, pull back a little bit, then you get up again, pull back a little bit, up again, pull back a little bit. Very similar to Palantir. You could see the same deal. Pulls up, chops, pulls up, and chops, and creates a new base. Same deal with Mara, as we've been trading it a lot this year. Same deal. You get a little bit of consolidation, you get a pop, consolidation, and a pop, and then consolidation, and then possibly another pop on the same kind of high beta names. That's what you've been getting. Just up, chop, pull back, chop, and then up. So the idea is to catch it exactly perfectly. Not the easiest endeavor, as we know, but Shopify hasn't really broken anything. If it breaks that level, if it does break 54.50, that gap fill is in play. Very similar to Tesla, very similar to Apple, very similar to Microsoft. And I have no problem shorting Shopify or any stock at whatsoever if the actual technicals show that. Let's go and take a look at end phase. End phase breaking down, you do have an upside gap to fill for two of them on the daily. You're below major moving averages and near support. Right around 120 is where we're looking at support on end phase. If we look at the weekly, you are below the 200-day. Not good. So your last gasp is right around 120. If that breaks below, we're going to fall a little more on end phase because you can see the weekly 200-day, not good. And keep in mind, the weekly 200-day is the exact level that the S&P bounced from on the October lows. Let's go and take a look at TXN, Texas Instruments, another semiconductor name. We talked about this on the top 10 stocks of 2023. It's part of SMH, and it's just chop. It's just chop on the daily, complete chop. 165 between 185. Not much to do here unless you're just trying to collect the yield. And if that's the case and you just want yield return or dividend return, your best bet is just to put in a money market fund paying about 5% or a CD. And if you're just going to wait, rather just wait in cash than invest in a TXN unless it's part of the SMH, which is completely different. Let's go and take a look at Bank of America. We know that they had that pullback due to the regional banks and their downgrade with Moody's. I'm still waiting for 32.95 to break. Then we can have this play this gap fill at 33.99 to 34. We rejected it pretty closely to 32.90 or so. We're above the 20 at least for now, so it's still holding up a upward trend at least in this range. But until you break 32.35, you're really not doing much on Bank of America. JPM is outperforming them as well. So again, my call on JPM, doing a better stock. What do you think of Goldman Sachs and JPM long term? Javier is asking. I love both long term. I think both of them are the stocks to own in that space. In regards to Goldman Sachs, I think Morgan Stanley is fine too. But Goldman Sachs, we know they actually have a huge presence, or the largest presence in investment banking and wealth management. JPM being right up there with it. Merrill Lynch and Bank of America obviously is up there. Morgan Stanley as well. But Goldman Sachs is the, hate to say it, no pun intended, the gold standard for investment banking and wealth management. That's the name that everyone knows. And we talked about that with Tesla, right? We always want to have the big name, the name that everyone knows, the brand name, the McDonald's of the world, the Starbucks of the world, the Coca-Colas of the world, the Nikes of the world. Those were what people think of when they think of certain products. People say a phone, people think iPhone. So Apple's a good investment, for example. That shouldn't be the only thesis to invest, but again, it's important to have these brand names that is universally known. They tend to do very well, Disney notwithstanding lately yet. Disney does report after the bell, so that's what we're looking for. Goldman Sachs, it's holding on to some support. It's right at the 20-day moving average. again, this is not enough of a sale yet. The way I see it is like you want to go to the store and you're seeing a 2% off sale. That's not going to get you to the door. You need something a little more, and I'm waiting for October for that seasonality to pull back. Maybe we get a 5 to 8% pullback, give us an opportunity to start shopping a little bit. But in a bull market, guys, I hate to say it's pretty boring because you're either trading the bull market or you're just watching your portfolio go higher. It's usually in the bear markets where you start seeing some opportunities, obviously, on some sales. But as of yet, there's nothing quite there to trade in terms or to buy as of yet. You could see that we're pulling back a little bit more on the NASDAQ side. But again, nothing has really changed here. You still have a downward trend on Microsoft. I still have puts. You still have a downward trend on Tesla. I still have puts. So it's just chop. It's gonna be a fight. That's it. It's gonna be a fight of low liquidity and low demand across the board. And usually, for the most part, when you get low demand, low liquidity, in order to attract buyers, you got to lower the prices. So that's what we expect. 4,500 should retest today. Until CPI tomorrow, we really don't know if CPI is really going to affect equities. It's going to affect the dollar, but we don't know how it will or how it won't. So again, we're going to go ahead and make sure to keep that CPI number in mind. We want to see if we get a 2.9 handle. Let's just say my puts don't work, for example, and we soar and we break highs because CPI is showing below 3%. I will not be too upset because we'll just make it up from the upside. So right now we're kind of at an inflection point where do we break these support levels? Do we start filling these gaps ahead of CPI, front run the bad number? Or do we chop around and see what happens until then? So again, we're in between two hard places here, rock and a hard place. Again, do we have the continuation for a leg lower, or do we get that kind of Monday pop that we got where we're just chopping around and kind of screwing the bears and the bulls? Because if you were short into the weekend onto Monday, you got hit with that big pop. If you tried to chase it on Monday, you got hit on the way down. Those premiums got hit. And again, if you try to do puts like me, we're getting a little bit chopped right now. So it's back and forth, back and forth. This is low liquidity environment. This is what it is, not a tons of demand. So the dog days of August continue. The good news, it's almost done. The first 2 weeks are usually the worst with August. It doesn't get necessarily, oh my God, better in August. Remember in August of last year, we had a nice pop into the mid-August. And then after the Jackson Hole Symposium, we fell from end of August into September. So we're going to be very careful on what we see. Are we due for a pullback? We've said this many times. Pullbacks are opportunities, and that's all they are. It's still a bull market. Nothing has really changed. We're about, I don't know, 300 points away from all-time highs on the S&P. Not too far, but we'll see where we go from there. Again, thank you guys for joining me early this morning. Hope this prepped you. If you are interested in any headlines, you can always get to our market blog. We have the economic calendar. We had mortgage applications come in. So we could see that 7.02% on a FHA loan for 30 years. That's the highest since 2002. So again, mortgage demand drops after FHA loan interest rate hits 21-year highs. We also have EIA petroleum status report. That's crude oil inventories, 4-month bond auction. And this is the big one, 1 p.m., the 10-year bond auction. We want to see if yields continue to at least pull back since last Wednesday. We are now at that 4% level. So we're going to see if demand is still strong for these higher yielding instruments, relatively speaking, the past 10 years, or people are just waiting for higher rates with the Fed. We will see with that bond auction today, and that's going to be extremely important. We'll let you guys know on the blog as always. Tanai says hello. Hello, good morning. All right, guys, thank you again for joining me this morning. I know a little early, but again, I wanted to make sure you guys were updated. I will catch you guys on the blog for the open, and I hope to see you guys there. Have a great rest of your morning. Cheers all.